Hello YouTube family, welcome back. We want to talk about business deductions as they relate to your automobile. So if you are in the trade or business and you have a vehicle that you use for that business, we're going to talk about the details and the methodologies that you would use to claim deductions related to that business vehicle. So when we talk about business vehicle deductions, we're putting this in a context of this is a vehicle that's being used for both personal and business reasons. So it's got kind of a combined use, if you will. There are two methodologies that you will use, and you have to choose those methodologies the year that you place that vehicle in service. The first methodology is called a standard mileage rate. The second is called the actual vehicle expenses. Essentially, you choose one or the other, and the year that you place the vehicle in service is the year that you make the choice as to which methodology you'll use. So the question becomes, what is business miles in this conversation? If you have a home office and you're working from home and no regular office location, your travel to and from a temporary work location may be deductible, but your travel to and from a second job is not. If you're traveling from your main job to a temporary location or a second job, those are deductible business miles. This business mileage conversation then morphs into the methodologies that we're going to use to actually calculate and claim a deduction on our Schedule C if we're in a business, our rental schedule, Schedule E if we have rental properties, or Schedule E, Page 2 as unreimbursed partnership expenses, or expenses that you turn into your partnership to be reimbursed, or expenses that you turn into your corporation to be reimbursed. So the standard mileage is essentially a federal rate that is calculated and provided to us from the Internal Revenue Service, multiplied by those business miles that you drove during the calendar year. In addition to that calculation, you add to that your parking fees and tolls that you might have incurred during the year. In addition, if you have travel-related expenses, say you fly to another location and you actually rent a car, that is different because the rental expense and the fuel that you pay, the insurance you pay related to that rental is directly related to your business and therefore is a business deduction. It doesn't go into the standard mileage conversation. The things that you cannot do when you claim the standard mileage rate is deduct your fuel expenses, insurance, taxes, or any of your actual expenses outside of the parking fees and tolls. In order to claim the standard mileage deduction, you need to have a mileage log that shows the business purpose and travel that you did during the year, who you met with, and how many miles it was. You can do that in Excel, you can do that in other apps, QuickBooks, have a written log of that. But essentially you need to document that throughout the year, whether you do that on a daily basis, a weekly basis, but some sort of a regular basis throughout the year that keeps up with the mileage that you drove for business. You can also use an app. A commonly used app is called Mile IQ, where it taps into the GPS of your phone, and essentially you tell it which travel was business and which travel was personal by swiping one way or the other. At the end of the year, Mile IQ generates an Excel spreadsheet that is the equivalent of a log of your business miles. When we calculate the standard mileage rate, we're going to use the rate that the IRS gives us. In 2022, we're in a bit of an odd situation where we have two different rates for the first half of the year and the second half of the year. So January to June 30th, you'll use 58.5 cents per mile. July 1st through December 31st, you'll use 62.5 cents per mile. As a part of that 62.5 cents per mile conversation, 26 cents per mile is considered the depreciation component. This comes into play if you sell that vehicle and you have enough business miles that you wrote off. There is technically a depreciation recapture that happens when you sell or trade that vehicle. We won't delve into the detailed calculations of that recapture, but just know that same depreciation recapture applies when we get into the actual expense conversation as well. When we calculate the standard mileage, we take our business miles times the 58.5 or 62.5 cents per mile. In our examples throughout the rest of the video, we're going to be using a situation where we've got 10,363 business miles and 15,677 total miles on the vehicle, representing 66% business use. So we take our business miles of 10,363, multiply it. We'll assume all these miles were driven July 1st through December 31st for ease of calculations. That's going to yield a deduction of $6,477. So in year 2, we do the same thing based upon year 2's federal mileage rate, year 3, etc. So those are the ways that we keep up with that standard mileage rate. It's very simple. Essentially, a business mileage log multiplied by that federal rate. It's not very complicated at all. You do have to make the choice when you put that vehicle in service. So the year you trade your vehicle is the year you can change your method, if that's what you choose. If we're going to have or choose the actual vehicle expenses, the calculations will include the various individual expenses that you incurred on that vehicle. The cost of the vehicle will be depreciated over time. You have license and registration, fuel, parking fees, tolls, repairs and maintenance, lease payments, insurance, tires, and the interest on the loan if there is one. All of those expenses get added up, and then we take and multiply those times the business use percentage. If we're using actual expenses, we don't get to claim the standard mileage rate. We choose one or the other. We're going to be required to have a mileage log on that vehicle. Got to keep those records and have proof of that business purpose, and so that mileage log becomes critical to be able to claim the actual expenses as well. So the date, time, place that you spent the money on the repairs and maintenance so that you can show that those were for the vehicle, the fuel expenditures were for the vehicle, etc. And then making sure that those records are kept timely, and that's going to be required to be daily or weekly. If you just have I drove 15,000 miles on my vehicle for this year, that's not a deductible expense. The IRS publication actually states that. So again, with the actual business expenses, you're going to have written record of the actual expenses you incurred, as well as the mileage log that shows the business travel that you had on that vehicle. And the calculations are basically run using the business use percentage that we started with, 66%, times the actual expenses that we incurred in the year. So in the year we buy the vehicle, let's say we spent $25,000 on it, plus our insurance, our tags, our repairs and maintenance and fuel, for a total actual expenses of $29,000. We're 10,363 divided by our total miles that we drove of 15,677. That gives us a 66% business use percentage. Multiply that times our actual expenses, we get to deduct $19,157 in year 1. When it comes to year 2, because we fully expensed the cost of the vehicle through the depreciation, our deduction is $2,589 because we're still at 66% business use, and we've got our carrying costs of insurance, tags, repairs and maintenance, and fuel as we continue on in year 2. And then in year 3. So our deduction goes down in the following years after we purchase the vehicle because we fully depreciated the vehicle, as compared to our standard deduction where we get a smaller first year deduction but larger following year deductions. So the question becomes, well, which method should I choose? I don't know what makes sense. In order to analyze that conversation, you need to have some thoughts put together as to how many business miles do you expect to drive on an annual basis as compared to your personal miles. What do you expect the cost of that vehicle to be when you buy it? And then what are the other carrying costs of that vehicle, such as how many miles per gallon do I get? What is the cost of fuel? And then what do I expect to incur in my repairs and maintenance, my insurance costs, and any other carrying or related expenses? You can find more information about the travel expenditures in a greater detail and discussion in publication 463 in the link below. But hopefully that gives you a overview of the mileage versus actual expenses related to a vehicle that is used both personally and for business. I appreciate you watching. Thank you.